Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Dan Caplinger and Matt Frankel giving a 1 to 10 rating to Visa, ticker symbol V. We'll see if it can beat the 7.4 they recently gave MasterCard. We'll talk about the business first, including factors like industry and competition. We talked about MasterCard. A 10 is invincible. A 1 is hopeless. Dan's given an 8. Matt, you've given a 9.
Yeah, I mean, Visa is effectively a duopoly on the payment processing business along with MasterCard. Its margins are so high, there have literally been congressional hearings about it, about how much money these companies are making. 80% gross margin, 55% net margin over the past 4 quarters. There's also a lot of growth potential, especially compared to what people think. Everyone thinks this is a completely mature business. There's still a lot of room to grow in terms of cross-border payments, business-to-business payments, and things like that. So I gave it a 9.
Yeah, my score 8 is, Visa's got good worldwide exposure. I kind of actually like that they are a little bit, I think, more exposed to the U.S. market, more focused on the U.S. market than perhaps MasterCard is. I think that plays to current strengths in the macroeconomic environment. I also like, so far they've been really successful. They've maintained their edge. Even though there's plenty of innovation in financial technology going on elsewhere, it hasn't disrupted Visa's business nearly as much as some of the proponents of those newer fintechs have suggested that it would.
Management. A 10 is Warren Buffett. A 1 is Homer Simpson. Once again, Dan's at an 8. Matt, you're at a 9.
Yeah, and I give it a 9. I'd probably give a very high mark to whoever was in charge of Visa, just because it's a business that essentially runs itself. It's one of those, as Warren Buffett calls, a ham sandwich company, where you could put a ham sandwich in the CEO role and it would do just fine. But Ryan McInerney, he has been doing a great job. He's only been CEO for 2 years. He's been with the company for about 12 years. He formerly led their global business, and he was even before that was CEO of J.P. Morgan Chase's consumer banking business. So really impressive resume, and I can't argue with any of the moves he's made. He's moving in the right direction.
Yeah, I agree. I like it when CEOs don't feel like they have to make really big, high-profile moves right when they come in, when the business doesn't necessarily warrant it. Sometimes the best decision is not to do something rather than to do something. I dig them a point, down to 8, just because one area where I really like CEOs to shine is in promoting stock performance, and Visa stock has underperformed the S&P over the past couple of years. But that said, that's been a difficult nut to crack for just about any company that doesn't have a market capitalization above $1 trillion at this point. So I'm not going to penalize too much, but that's the source of that point.
Yeah, it's hard to rate some of these ham sandwich company CEOs, right? But it's just like if you have a good portfolio of stocks that you did the vetting on early and they're quality businesses, it's that being able to not do something when activity would actually make things worse. It's a hard thing to judge sometimes because you're like, well, anyone could do it. Financials. A 10 is Fortress. A 1 is Yikes. Both of you have 9s this time. Why so good, Matt?
Normally, Dan subtracts 1 from every score I have, so I like where this is going. We both give it a 9. I said a 9 because a little over $15 billion in cash and short-term investments, stellar margins, which I've already mentioned. They have a little over $20 billion in debt, which for a company with over $600 billion market cap is very low. And they've steadily, Dan's correct that it's underperformed the S&P for the past 2 years, but they've grown their revenue very steadily even as the business scales, 14% revenue growth rate over the past 3 years, and pretty consistent over that time. So I'd say a 9 for financials.
Look, my knee jerk might be to avoid giving 9s and to ding a point on what Matt's doing, but there's just nothing to argue about here. The company, the business model is golden. It just makes money. And I really like that with these strong financials, there's risk, but there is much less risk than you would find in a bunch of other financial institutions. And so the ability for Visa to keep making this much money, but doing it in a way that minimizes risk is just really impressive. That's what deserves the 9 in my view.
Dan, let's move on to valuation. How well will Visa stock do over the next 5 years? How safe is it? 10's a sure thing. 1's a lottery ticket.
I gave it 5 to 10%. That's kind of my general rule for where I see the market at this point. We're at record highs for the S&P 500, and I just think, I'll admit I've been wrong for a while, but reversion to the mean to me seems like a reasonable assumption to make. Safety score of 8, though, is actually higher than Matt, I will point out. And I'll just say this. Matt's right. The valuation on the stock is pretty high, but this is a company, I think, that has strong brand value, strong investor awareness. And so if you had to pick a company to kind of have that as a sustainable premium to what you might see in other financial institutions, I feel more comfortable with that from a safety standpoint than I do with a bunch of other companies that, may not, even companies that don't necessarily have the same valuation, but also don't have the same leadership position in the industry.
Yeah, I said the same 5 to 10% over the next 5 years, but a 7 for safety score. And I would give it a higher safety score if it wasn't trading at 34 times earnings right now. I'm not saying that Visa will never be disrupted in my lifetime, but I don't see any scenario in the next 5 years where Visa is not the company that it is today.
Yeah, we talked about the same two panelists. We talked about the blockchain as a disruptor for MasterCard, and you all were basically like, they'll figure it out. Just like, I think Dan was talking about like fintechs and, will that disrupt? And they figure out how to go in there. I do have some personal concern about just like, if they start taking those large fees down by just undercutting those, but we'll see. Let's move on to top it. Dan, is there a company in Visa space that you like more?
There's not at this point. I used to like MasterCard better. It used to be my favorite because I really liked their international exposure. I thought they were doing a better job of expanding internationally. In the current geopolitical environment, I think that's become less of a benefit for MasterCard and more of a benefit for Visa being more focused on the U.S. market. I think that's that. So I'm not going to pick MasterCard. I like Visa better.
I'll say Capital One Financial, COF, and I'll tell you why. Because once they acquire Discover, they will be a Visa and MasterCard competitor because they'll have their own in-house payment network. They have enough credit card volume that they could actually, use that payment network. And that stock trades at a very low valuation compared to Visa and MasterCard. It's more risk, but it's a cheaper stock.
Thank you to both Matt and to Dan. They've given Visa a strong overall score of 7.7 out of 10, short of that 8.0 that would force me to own shares, but pretty similar to the score they gave MasterCard, a little higher, 7.4 for MasterCard, 7.7 for Visa. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is another credit card company. We talked about it for a second, Discover. Till then, Fool on.